Did you enter into a forbearance plan? Most likely your time is up, if not already. So what now? Today we're talking about 4 repayment options, but more importantly, we're going to talk about the 4 major reasons why the chances are very high that you will not lose your home. First, let's talk about when these forbearance plans are scheduled to end. Under the CARES Act, homeowners who have a conventional FHA, VA, or USDA loan could apply for up to a 6-month forbearance and apply for an additional 6-month extension. Keep in mind that your forbearance time starts when you actually request your forbearance. For example, if you have a conventional loan and you applied for a forbearance and an extension on April 1st, 2020, then your time's going to be up on April 1st, 2021. Remember, you have to have a plan in place to repay these payments that you missed. If you're still experiencing hardships due to COVID, here's the good news. Recently, Freddie Mac and Fannie Mae and the feds have given homeowners one more opportunity to extend. For conventional loans, it's only 1 time, but for government-backed loans, it's 2 times. Homeowners with conventional loans can request 1 additional 3-month extension for 15 months total loan forbearance. To be eligible, you need to have been in your COVID-19 forbearance plan prior to February 28, 2021. Homeowners with government-backed loans, meaning FHA, VA, or USDA, can request 2 additional 3-month extensions for up to 18 months total forbearance. But to be eligible, you would have to have been in your forbearance plan prior to June 30th, 2020. So depending on what type of mortgage you have, you could be eligible up to 15 to 18 months of forbearance when it's all said and done. It's important to know that these extensions are not automatic, and it's up to your individual mortgage servicers to grant final decision. Help is only available if you ask for it. So what happens when forbearance ends? When you're ready to start making payments again, you'll have to have a repayment plan in place in addition to your regular payments. Remember, forbearance is not loan forgiveness. Here's a few options. The first option is to make a full repayment. That means a one-time lump sum payment. If you're in the position, this is the best option. But here's what most people do not know. Lenders cannot require you to do this. If you still can't do this and you can't make the lump sum payment, there's other options. Option 2 is intermittent payment. This is where you make a payment arrangement with your mortgage servicer to repay the missing payments over a 3, 6, 9, or 12-month period. Again, this is in addition to your regular monthly payment. Option 3 is payment deferral. This option allows you to repay the missed amount when you sell, refinance, or at the end of the loan term. Option 4 is loan modification. This may be an option, but in my opinion, it's the last option. But it may help you if you are at risk for foreclosure. Most likely there's going to be another option that our current president will implement. I've got mixed feelings about that, so I'm not going to say too much about that for now. When your forbearance plan ends, it's important to have a discussion with your mortgage servicer to have one of these plans in place, and which one works best for you, and also which one you're eligible for. And by the way, you don't have to wait until your plan ends to exit your forbearance plan. You can exit anytime you want. Just make sure that you have a repayment plan in place. And here's a couple of tips. Mortgage servicers are quite busy these days, so you may not get through on the first attempt. But don't give up, be patient. They want to help you. The best time to call is first thing in the morning and at the very end of the day. Check your servicer's hours of operation to make these calls. Also, keep a close eye on your credit score. The CARES Act says that your credit score cannot be impacted if you're in a forbearance plan. But mistakes happen. Lenders have never had to deal with this huge scale of forbearance programs before. It's your responsibility to keep an eye on your credit score to make sure that you don't slip through the cracks. So what happens if you still cannot pay after all the forbearance plans and exits and extensions? This is the worst case scenario, but again, you still have options. If you're at this point, you'll need to dispose of the house to preserve your credit and maintain the ability to purchase in the future. The good news is, because of rising house prices, chances are very high you have equity and you could sell your home and still walk away with a nice profit. Refinancing could be an option too. However, you're going to still have to meet the same requirements as you did when you first bought the home. Check with your mortgage lenders to see what you qualify based on your individual situation. And lastly, foreclosure, short sales, and deed in lieu are also options of disposing of a home that you can no longer afford, which brings me to the 4 major reasons why most homeowners will not lose their home to foreclosure. For starters, those who have entered into forbearance plans and now have exited is nearly 50%. That's a huge percentage. That tells me that earlier reports made by others that predicted a foreclosure wave was a bit off. At the end of March 2021, the MBA, the Mortgage Bankers Association, published these facts. 26.6% made their monthly payments during the forbearance period. 14.7% brought past due payments current. And 7.6% paid off their loan in full. Now, there's still 2 million households still in forbearance plans, but with all these great options, these numbers are encouraging. Here's one of the biggest reasons why most homeowners will avoid foreclosure. Banks don't want your home back. Banks learned hard lessons from the crash of 2008. They don't want the headaches of managing foreclosed properties on their books. This time is way different. They have systems in place to keep you in your house. They want to help you and have trained their staff with this mindset. And it's working. A recent report published by the MBA reveals that out of all the homeowners who exited forbearance plans, 35.5% worked out a repayment plan with their lender. 26.5% were granted a loan deferral, where the borrower does not have to repay the lender interest and principal on the loan for an agreed upon period of time. And 9% were given a loan modification. These positive percentages are indicators that banks are being successful in their mission of wanting to help homeowners stay in their homes. Next, there is no political will to foreclose on your house. As I mentioned earlier, most likely the government will step in with another plan. The Consumer Financial Protection Bureau is proposing new guidelines to ensure that people stay in their homes. Here's a few major points of that proposal. The proposed rule will provide a special pre-foreclosure review period that will generally prohibit servicers from starting foreclosure until after December 31st, 2021. The proposed rule would permit servicers to offer certain streamlined loan modification options to borrowers with COVID-19 related hardships based on the evaluation of an incomplete application. The proposal rule wants temporary changes made to certain required servicer communications to make sure borrowers receive key information about their options at the appropriate time. None of this is set in stone yet. In fact, it's still up in the air whether or not the CFPB even has the power to delay foreclosures. If you're watching this on my YouTube channel, I put a link to the description to the entire report if you want to read it. If all else fails and you have to sell, there's no better time than to do it now. Home prices are still rising, demand is off the charts, and we still have historically low inventory. 9 out of 10 homeowners have more than 10% equity. That's phenomenal. And it's more than enough to cover your selling cost and walk away with a profit. As a home seller, you're in the driver's seat. All this being said, the likelihood of us having another foreclosure crisis is about 0%. I'm Lisa Kelly, Lakeland Homes and Lifestyles with Premier Realty. I hope you found today's video helpful and enlightening. And if you did, give me a thumbs up and hit that like button. And please take a sec and tap to subscribe. I'm here every single Monday with a new video about the greater Lakeland area and to help you make smart decisions when buying and selling a house. Until then, I'll see you on the next one.